Hold on to your seats, folks. The UK's manufacturing sector just recorded its first output growth in a full year. But is this a sign of real recovery or just a fleeting spark in the dark? That's the burning question from the latest PMI data, and it's got everyone in the investing world buzzing. If you're new to this, PMI stands for Purchasing Managers' Index, a key economic indicator that gauges business activity in manufacturing. Think of it as a health check on factories and production lines. Numbers above 50 signal expansion, while below 50 point to contraction. Now, let's dive into the details and unpack what this means for the economy, with some simple explanations to keep beginners in the loop. The final PMI reading for October came in at 49.7, edging just above the preliminary estimate of 49.6, and marking a clear uptick from the prior month's 46.2. For context, imagine a factory that's been running on fumes. This small bounce shows a bit of momentum, even if it's still below that magical 50 threshold. You can check out the full report for all the nitty-gritty at this link. https://www.pmi.sbglobal.com/public/home/press release/D7D86A93F44F69-5A0E92FF811030. But here's where it gets controversial. Is this improvement sustainable? Or are we seeing a temporary illusion? Diving into the key findings, manufacturing output actually rose for the first time in 12 months, which is undeniably exciting news. It's like a runner finally breaking through a long plateau. Progress at last. On the flip side, total new orders and new export orders continued to contract, albeit at a slower pace than before. To explain this simply, new orders are like incoming customer requests. When they shrink, it means demand is cooling, but the slower contraction suggests things aren't deteriorating as rapidly. This could be good news for suppliers, as it implies less pressure from plummeting sales. Now, and this is the part most people miss, the comment from Rob Dobson, director at S&P Global Market Intelligence, adds a layer of caution that really makes you think. He notes that while the October PMI indicates UK manufacturing production climbing for the first time in a year, a definite win, there's skepticism about how long this upswing will last. Picture this, a lot of the boost came from the auto sector supply chains getting a jolt from Jaguar Land Rover JLR restarting production, but that might just be a one-off boost, like a short-lived energy spike rather than a full recharge. Adding to the worry, sluggish demand from both homegrown UK buyers and international markets meant that October's growth relied heavily on manufacturers dipping into old order backlogs and letting unsold inventory pile up. It's as if businesses are burning through leftover work to keep the lights on. But without fresh enthusiasm from customers, it could fizzle out quickly. But here's the kicker that's bound to stir debate. Dobson points out fears that the upcoming budget might worsen the ongoing issues from last year's fiscal moves, particularly around the National Minimum Wage, NMW, and Employer National Insurance Contributions, NICs. These policies are designed to support workers and fund public services, but critics argue they increase costs for businesses, potentially squeezing hiring, demand, and production, a classic tug-of-war between social policies and economic growth. Business optimism did hit an 8-month high in October, yet it remains below its long-term average, leaving manufacturers in what feels like a limbo, waiting for clearer signals from domestic policies and global tensions. In essence, this PMI data paints a picture of cautious optimism tinged with uncertainty. For beginners, think of it as a weather forecast showing a brief sunny spell amid stormy clouds, promising, but reliant on external factors like budgets and geopolitics for lasting change. It's a reminder that manufacturing isn't just about churning out goods. It's intertwined with everything from wage policies to international trade. What do you think? Is this PMI bounce a true turning point, or just smoke and mirrors from temporary factors like the JLR restart? Do you agree that future budgets could make or break recovery? Or is there another angle we're missing? Share your thoughts in the comments. Let's discuss and see where the conversation goes.